The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, and welcome to another Danielcode webinar. My name is John Needham. I'll be your host for today. And welcome to all our friends who are here today. And thank you, Adrian. You're on the bull, son. Adrian's with us. He's doing a tutorial right now. And he tells me that he can hear me, so I guess the rest of you can as well. So plenty of others, all our usual friends. Bob's with us, and Greg, who's used to be I think he probably still is, might have retired. Was a wealth fund manager, had a big business in Colorado Springs, lovely man. I had the pleasure of meeting him some years ago. Mark's with us, of course. Mark L. Be no party without him. All the Peters are with us. Peter Mack, who's not a day trader. Another Peter. Pietro. Scott. Welcome, Scott. You're a new name. Sean's down in Adelaide. Good to have you with us, my friend. Stephen, another Stephen. Jerry. Excuse me. And Toddy's with us over in Southern California. Great to have you, my friend. He's been with us for a long, long time. And, of course, Trevor's with us. So there'll be more coming in. Well, do we not live in interesting times? I mean, what a great lot of fun we've had this week. It's really, we've been spoilt for entertainment and joy with the trading, haven't we? Anyway, let's move on. We have much to talk about and much to show you. Here we go. I've had this up on the webinar now for quite a while, and it says simply learn to trade the Danielcode time signals. We have a number of products. The one you should graduate to eventually, or sooner if you like, and go straight to it, is creating and trading the Danielcode time signals. They have been absolutely sensational. They are, my view, the safest and most profitable method of trading that I've ever seen. So if I could ask you folks, take some time. If you haven't done this already, this page you're seeing now comes from our website, the homepage, www.thedanielcode.com, and it's 4 videos of me interviewing three of our traders. The first one is Mark L., who's with us today and has been an absolute stalwart Danielcode fellow. Glad to have you with us as always, Mark. The second one comes from Amy, who's a lovely lady, lives in Boulder, Colorado. Never saw a trading chart until she came to me and did a tutorial. And you can see in that video she's returning 500% on margin in the market she's working on. Videos 3 and 4 both come from Justin. Justin is a most delightful young man who lives in the Hunter Valley of Australia. And the Hunter Valley is a bit like Kentucky. It's where all the big horse studs are, and the grass is so green and luscious you could eat it yourself. So each of those is about 20 minutes, and I do really recommend that you take the time to listen, to watch more than one of them. It's one thing for people who are teachers like me to tell you how wonderful their trading is. And I can tell you that during those years where I was searching valiantly for the real answers to trading futures and Forex, I went to a lot of these guys, all the gurus, all the big names, and I don't wish to be critical of anyone, but it didn't work for me, and that was the point. So it's not a question really. The question is not how good a trader are you, the teacher. The real question you should ask is, how good will I be as a trader after I've done your course? And that's why we've got these videos. They've been up there for quite a while now, and they're there to tell you and to illustrate to you the trader's take on after they've done or are in the process of doing their Danielcode tutorials. Hello, I have a small cat here who's talking to me. She's an inquisitive little thing. We have two of them. They both arrived by accident after we lost our last cat. It was a wonderful, wonderful friend. I said to my family, no more cats, please, ever. And then, of course, one day my son turned up with a carry bag with a creature in it, and I had a look. It was in the shade. I couldn't see it terribly well, but I saw these two glowing, great big golden eyes. I thought, oh, it's a beautiful thing. Whatever it is, I had no idea. That's all I could see, because the cat is black, and being in some dark shadow, I didn't see the rest of it at all, except this set of beautiful, big, large, golden eyes. And anyway, then I looked a bit further and I saw another set of big, large, golden eyes. And I said to Mrs. Needham, my eyesight, really, I should go and see an optometrist. I might need a new prescription, I think. I'm seeing double. Anyway, it turned out I wasn't seeing double. They were a pair of these beautiful cats. They were a brother and sister pair that had been bonded, and my son turned up with them and brought them home. And of course, animals are a bit like children. Once you have them, you can't give them back, and you hope they're going to be a delight, and usually that's the case, as these two have turned out to be. So these two beautiful black cats have joined our two dogs, both of which are rescue dogs. Only ever had rescue dogs since we left the farm back in the day, and two children, two cats, two dogs is the Needham family, and a menagerie of birds. We're fortunate enough to live on an acreage estate, and the birds are just an absolute joy and delight. Anyway, we're moving on here to say, if you are a trader in a hurry, do you sincerely want to be rich? If you do, ask me how I can make you a Danielcode super trader in just 3 days. The new TTT, Teach Yourself to Trade video course program, which we've introduced late last year, has been doing so well, and really, quite literally in 3 days, I can make you a super trader. Let me know if you're interested, jneedham@thedanielcode.com. And think about this, as far as I know, it's the quickest and fully legal way of making money. If you're interested in money, you should have be learning how to trade futures in Forex. But I've started off my trading life as a Forex guy, as many of us did, and then I've graduated now to be pretty much concentrate on futures. But we still cover Forex, and we have a large number of clients who trade Forex. So it's just take your choice of poison, because all markets trade exactly the same with Danielcode. Futures, Forex, equities, crypto, whatever you like. It's a universal number system, a universal reality of markets, that they all trade basically on the same indicators when you're using the Danielcode time and price cycles. So yes, I mean it. If you want to be a super trader, take the tutorial now. We have a one-on-one detailed tutorial you can do with me, one-on-one, or you can take the Danielcode TTT, we call it, Teach Yourself to Trade. It's a video series, so you can learn that and go for that in your own time, at your own pace. But it's been quite wonderful. Okay, so I've called this Life in the Everybar, and what that is all about is that the Everybar comes from the trading knowledge that everything pertinent is known by the market. All news is known by markets. And sometimes market reaction may seem premature or delayed, but always the market is right. And our trading is based almost entirely on chart reading. It doesn't rely on studies or indicators other than some basic prompts, really, is all they are. And our hypothesis is that every single bar on any time frame has a story, and it creates a conditional market order. So once we decide that a turn is likely based on the time or price action, we create the relevant signal for you, which is posted on the website under the TO3 or TO3 plus or the 6S signals. But it's then up to the market to show that it agrees with us. We don't go selling at a target level, even with target recognition. What we say is that we believe this market is ready now for a turn. Now we want to see if the market agrees with us. And if the market agrees with us, we're going to ask it to go to another position. We're going to ask it to turn and go to the position that we've set out, which is published on the website every day. And that is when we get into the market. So we're not suffering from hubris or arrogance that we can tell what the market is going to do. We don't know anything about the future. Nobody does. Anyone who tells you they do, run away. But what we do is we create market orders that are placed to optimize the probabilities. And trading is all about probabilities, but with Danielcode, some of those probabilities get very high indeed. You can ask Mark L., who's with us. He's one of our super traders and has the distinction of having returned over 1,000% on margin in his paper trading of natural gas 2016. So there's the standard for you guys. If you think you know a bit about trading, run off some paper trading on natural gas for 2016. Remember that your target is Mark L at 1,000% on margin. The margin in that year, incidentally, was $3,200. Express it as a percentage of market. You should always express your market wins and losses, in my view, as a percentage of margin, because margin is the absolute minimum amount of money you have to put up to trade. And it's exactly the same as funds invested. You can't trade without margin, so your risk is relevant to that, relative to that margin. By following the system, it's a sort of query and answer system is the simplest method of assuring market integrity. And as you will know when you go through some of those videos that I've referred to, you'll see that the average return across a lot of markets, and Justin, who's been such a wonderful support for all of our Danielcode members, he did a backtesting analysis of 100 years, over 100 years of markets, which doesn't mean that he's Methuselah. It means that some were 1 year, some were 2 years, some were 6 or 7 years. But in total, it was well over 100 years that he backtested. And what he found is the average is around 450 to 550% on margin. And most tellingly, go to that video number 4 in that group. He'll show you all those details and tell you that in all his research, he's never found a losing market. And we're talking about Danielcode time cycles here. Okay, so this idea of market recognition, which is so vital, comes from our price trading module. It's achieved by the bar high or low, or the close finding its DC target with a variance of less than 0.1%. Not 1%, 1/10 of 1%. And that's hard for markets to do. And for those of you who do Danielcode courses, learn Danielcode price trading, you'll see that this whole target recognition is vital. In fact, any method of trading you've got, if you start adding Danielcode targets and you look for target recognition, that is when the bar high low or the close finds those targets at less than, equal or less than 0.1%, that will increase your profitability out of the sight. Just that one thing, it's quite extraordinary. So, Danielcode, the trader's friend. So you can start off with our TO3 reversal signals, move on to TO3 plus, which are reversal and continuations. You'll see some of those today. Look at our long-term forecasting with the fourth seal, which Frank DB, who runs the fourth seal for us, covers now S&P, gold, and crude oil. And boy, hasn't he been on the ball? It's quite extraordinary. We've been tracking this whole move since the day of the high, and it came when we expected it to, when we forecast it to. In fact, the question is whether, in fact, that's the all-time high. Frank's analysis is no, it's not. There are going to be higher highs. My analysis is that I trade the markets depending what their daily signal is. That's what I do. I have an opinion that you can take the other side of that comment, because in all my research on time cycles, remember, I had the pleasure of teaching Frank DB at the Danielcode live tutorial in New Zealand in 2011. So I've done massive amounts of research backtesting to find and create our fourth seal, which is such an amazing forecasting tool. My view is that you can forgive one mistake. And what we had as we approached the recent high is all of the markets broke through their vital last gasp black line resistance, except the S&P. And then a couple of days later, it too joined the rash of trades that had gone past their black line. My view is that on everything I've ever seen of markets, you can always forgive one bar as long as it's reversed very promptly. So you can see where I am a bit on that argument, but it doesn't matter, because your business is to trade the markets, and you're in this wonderful privileged position of trading futures or Forex, both of which are derivatives, and they're highly geared. That's how you make so much money. All you've got to do is trade the signals in front of you. Be short when there's a short signal that's elected. Be long when there's a long system elected. Don't be a bear or a bull. Just be an accurate trader. All the money in the mint is yours if you want it. So there's some of the ideas you can go into to get yourself started. And it's, for me, I have to say, it's the most wonderful business you can imagine. I was going to tell you that I have a birthday later this month, and I'm not going to tell you how old I am, other than it's been a joy and delight. I've been trading markets now for, well over 30 years, and no one's more excited by them than I am. No one's more amazed by these Danielcode signals than I am. But that's the reality, folks, as so many of you know. With this new Danielcode module, it's called Beyond Masterclass. That's only been released quite recently. You can do that as a one-on-one tutorial program with me, or you can do it on the new Teach Yourself to Trade video series at a much lower price point. Either way, do have a look and take this opportunity for you to become a super trader. This Beyond Masterclass, it tells you, it creates a new trend signal. An intermediate trend signal usually comes 2 to 4 days after a swing high or swing low. It's very, very strong, the trend signal, much stronger than our daily analysis, which we have to do. We have to trade on our daily analysis, but having the knowledge of the intermediate trend takes you to an entirely different level. It'll tell you when are the best times, and most importantly, the worst times to trade. And it specifically will tell you of a coming consolidation or multi-day destroyers of wealth, I call them. These sideways patterns in markets, which are called consolidations, for lack of another word, really they should be called dreadful things because they are simply destroyers of wealth. And in those consolidations, you'll see markets make a breakout to the high, then they reverse and close in the range. They'll make a breakout to the low, they'll reverse and they'll close in the range. Either way, you're not going to make any money. You'll lose money on these consolidations. So some markets, the Russell in particular, has a lot of these consolidations. But if you can learn to find a consolidation before it chews you up, and yes, you'll have lost one, maybe even two trades before you'll be aware that you're in a consolidation. But some of these consolidations, I've seen them go for 40 days. If you can simply do nothing else except avoid those, sidestep the market when those consolidations are on, your profitability will go through the roof. It's just, apart from which you'll be solving one of the greatest problems in trading. What everyone wants to know, when's this market going to consolidate? When's it going to move freely? The Beyond Masterclass tutorial will teach you that. Will show you how to hold these trades for longer. And really, it's quite extraordinary. Something else that's extraordinary, folks, is the accuracy of the Danielcode chart. I create the members charts twice a week, sometimes more often if it needs it. But what I want to draw your attention to is the 6-day charts. They're quite extraordinary, and they've been doing this. I've been doing them for quite a while now for some selected clients. But their accuracy is absolutely phenomenal. If you really want to know the next target, as opposed to with the daily charts, of course, we have a number of targets. When you get on the 6-day charts, you have much fewer targets, and you would expect them to be less accurate because you're making a determination when you put the numbers on the chart that these are where the markets will go to, on the basis that every bar on the 6-day chart is just that. It's created from 6 trading days. And they're pretty random when it starts. It just depends when your data starts. But somehow or other, magically, they sort it all out. I've got a number of different computers with different start dates for their data, and they all show exactly the same thing. This is crude oil, folks. And have a look at this. 1 tick at variance at its low, 5 ticks variance at its high, 2 ticks at today's low. That's it. Now, out of these numbers, there's 6,500, 5,500 to 6,500 ticks in each of these bars, in each of these red or blue lines. Yet this market is finding them consistently with 1 tick variance, 5 ticks variance, 2 ticks variance. It shouldn't be able to do that, but it does. And remember, these numbers that you're seeing on these charts are pure Danielcode time cycles that we convert to price. They come from being time cycles, and they can convert them then to price, which is what you're seeing. And this accuracy is just absolutely phenomenal. This is the S&P. And supposedly a big day down today, supposedly a panic day, bloodshed, biggest down move since COVID, blah, 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 absolute rubbish. Have a look at it. This market went to within 8 ticks variance at its close, and that number is 54.25.25, and there's 4 ticks for every number, so you're talking about 20,000 ticks in that number. It's found them with 8 ticks to spare. 8 ticks variance, 3 ticks variance at the high. Target recognition is valid at the bar, high, low, or on the close. So make sure you start thinking about this. Finally, here's the US T-bond 6-day chart. Incredible. 0 variance at the high of the bar that's just completed, and that's at the high. And on the close, 1 tick variance against the red number at 119.19. Extraordinary stuff, isn't it? And it happens all the time. I do urge you to take a look at that. It really is knowledge that you won't have anywhere else. Okay, well, the big story, of course, no need to tell you. You all read the paper, listen to the radio, have a news feed of some sort. Trump's stunning tariffs. And it's headlined in one of the papers that he gives a stunning response to Wall Street bloodbath as his tariffs caused bigger stock drops since COVID crash. Well, really? That doesn't mean a lot, folks, because it wasn't that big a move to start with, as I'll show you. It's hardly a bloodbath. Markets have been so overbought for so long. Any correction should not be surprising. And of course, we get much closer to it than that. And Wall Street had its worst day since the height of the COVID crash. That wasn't very much to exceed the COVID crash. Was anemic and pathetic. Those of you who've been with us for a while will recall it was 23 days down. In other words, the shortest bear market in history. And all of a sudden, that little bit of momentum to the downside was just grabbed and washed away. So much of this is actually conjecture. There's so much still to come, folks. This is not just entirely a US story. The story is going to be how some of the other major markets react, and tellingly, how the currencies react. And today, the big loser was the US dollar. It got whacked, and again, nothing to be too excited about. It looked very exciting at the low. It then rallied back off its low very considerably. Trump claimed $6 or $7 trillion would be coming into the US. A lot of that is conjecture. The equity pullbacks, as I'm going to show you, were quite muted, really. And there's lots of action to come as other countries react. The immediate result, though, is no doubt big fees to the US Treasury as a price for accessing the giant US consumer market, the biggest consumer market in the world. So that part is real. The rest, a lot of it's conjecture. There's still a lot of argument whether tariffs are going to be positive or negative. The reality is you're going to notice it straight away. It's going to put the cost of almost everything up higher. We're living in an environment where inflation hasn't been beaten. It's nice to say, yes, the Fed's got 3 data points to lower the interest rate. All that's one thing. The reality is inflation is sticky, and it's stuck in most of these markets at the moment. You only have to go to your supermarket to know inflation is alive and real and scary. We'll see what tariffs do. But traditionally, the conventional economists will tell you that tariffs will tend to increase prices. Of course they do, because you're putting on a direct tax, and that tax is essentially on the consumer. Okay, have a look at this. This is supposedly the biggest down move since COVID. Well, there's COVID. This is a 24-day chart. Everybar is 24 days. That was 24 days down. I remember it well. We traded it almost to perfection, and then rally back, and it's all over. And that was in March 2000. And you can see today's reaction down. And as I say, this is a 24-day chart. The bulk of that move came last month. The rally back up and a little bit of it today. It's not that exciting, folks. Here we are. Here's the current correction in the S&P. Flash crash back in 2020, March 2020. Really no drama to the downside ever since. We had a correction from the January 22 high. It was only 37.5%, as I recall, of the last range. So that's nothing much at all. And I'll do some more work on where this move is likely to go. But have a look at some of these big reactions. I say sometimes markets give you moves which are either premature or delayed. This is silver. Big reaction in silver. Why would that be? Because bullion is specifically excluded from the tariffs. So you technically have no no result on tariff on silver at all. Why does it? Gold had a reaction, but very muted. But silver, one of the biggest negative moves of the day across everything. But bullion is exempt from tariffs. They obviously didn't read that side note, but that trade I just, chart I just showed you was without any of the Danielcode numbers or analysis on it. Now I've added those. Look what a difference you get. You can see there's a TO3 buy signal into the high, into the red line at 35.15, almost exactly. There we've got a correlated TO3 sell signal. What do I mean by correlated buys and correlated sells? Some of these markets are so highly correlated that directionally they have a very high tendency to move in the same direction. It's not necessarily going to have the same quantum, but they will move in the same direction. Silver and gold are so highly correlated that a trade in one can be executed in any other, provided the signal is elected. By being elected, we mean it goes to the number which we specify in our trade program at the Danielcode website. So here's silver. Was this a mad, wild panic move? Well, have a look at the close. It's closed within 2 ticks off the next Danielcode number. And these charts are done, some of these charts were done months ago. Some of these numbers come from a long time ago. It's amazing. Markets know and understand the Danielcode numbers. That's the whole essence of what they do. And markets are saying to you every day, I know these numbers and I'm tracking them. And it's saying that usually at least once in every 3 days. If it doesn't say that to you, it's saying not these ratios, try a different ratio. Because markets, the bliss of it is that they tend to use the same ratios all the time. And all of those ratios, of course, are derived and come from the Danielcode time cycles. We then convert time to price. Excuse me, as you can see here. So that was the biggest loser. The other one with a big loser was crude oil. Why would that happen? Well, the key reversal bar was the day before. So it had reached its targets. It had a key reversal bar. Then it had a little bit of fun, a gap down this morning, and then run away. Why would that happen? Okay, here's a better chart. Here's a chart with the Danielcode numbers on it. You can see that it had where I've got the arrow saying TO3 plus sell signal on that key reversal bar. You can see that that's got the black line there above it, almost exactly to where it was, and the previous bar had just poked its head through the 72.01 black line and refused it by doing a key reversal bar, which is what we got again. So there was your big bar down in crude oil. Why is that? I don't know. Does the market think there's going to be an economic slowdown? The market think oil is going to be less required in markets? I doubt it. But markets do have the truth all the time. This is the Russell 2000. And I've been saying to you all year, maybe longer, this is the best of the equities to trade because it gives the clearest signals. This is Russell without Danielcode. Doesn't really tell you a whole lot, does it? But let's have a look at the Russell with Danielcode. Right at the high, TO3 plus sell signal, almost exactly at the 21.28.5 blue line. The previous bar was accurate to within about 2 ticks. Key reversal bar, down it goes. And then you had a little rally back up. We had a TO3 buy signal earlier this week. 2 bars up, bang, there's your tick turn into a big outside bar, for which we had a TO3 sell signal, which was created after the close of the bar before. In other words, it's there for all to see. Down it goes, lovely drop down onto the 1975 blue line, went straight past that today, and look at it, 1919.8, 3 ticks variance at the close. This is equities. This is supposed to be panic. this is supposed to be bloodshed. It's nothing of the sort. This is an orderly market move with a little bit of volatility. Nothing too dramatic here. This is not even the biggest bar on the chart. There are bigger chart bars not so long ago. But the newspapers do tend to make things a little bit more dramatic than they really are. So this is, I want to draw your attention to our Teach Yourself to Trade video series, particularly you folks who are new to trading. We have two separate streams of teaching you to trade. One is the Danielcode tutorials. That's our traditional method of teaching. And now, of course, we've got the Beyond Masterclass. We call that Tutorial Masterclass. And we now have Beyond Masterclass to take you to the next level. And you can see these comments here from Mark L., who's with us today. Greg Palladini, I'm sure he's not far away. He might have been a bit late coming in, and they are kind enough to allow us to use their statements, because, as I say, what's important for you to learn with trading is not what I know or what my trading's like, it's how much of that can I get across to you. In other words, testimonials from clients who've done the tutorial course. That's the vital message, and that's exactly what's happening here. And in addition, we have our TTT, or Teach Yourself to Trade video series, which is now 5 lessons. They're all less than an hour or thereabouts, and it teaches you the Daniel Code, what it is, where it comes from. It teaches you all of the Daniel Code price and time levels that you see on our members charts. It teaches you how to create all those numbers for yourself, and the various methods of trading, determining trend, adds a few trading tricks out there for you. And our newest one, lesson number 5, teaches the power of momentum bars and more. In other words, it teaches you when to use a 2-bar stop, when a consolidation sideways move is starting, which is vital. It tells you the best times to trade and the worst times to trade. And do go to that link down there, TYT, that's Teach Yourself to Trade, and you can read all about that, including our new lesson number 5. And this is, so far in this journey, more we look at this work Beyond Masterclass, which is based on my observations of markets over 35 years or more, it gives us intermediate trend signals. These signals typically come 2 to 4 bars after a swing high or a swing low, and they're much stronger than our daily trend signals. Because we're trading a derivative and the leverage works for you and equally works against you, we have to be very definitive in our stops and our risk management. And for that purpose, we have to make a determination about the apparent trend just from the last bar on the chart, just one bar. And that's what we do all the time, and we do it very successfully. But interestingly, with the new Beyond Masterclass course, it also creates a trend signal after 2 to 4 days from a swing high or swing low. And that trend signal is very, very good. It's very, very tough. It's much stronger than the daily signals, and it will teach you how to hold on to a trade for a much longer time. It will teach you what are the initial moves that are the harbinger, that are the what's the word I want? The cell, the egg, the beginning of consolidations, and tells you when these consolidations of sorts are forming very clearly. All of this stuff I do with you is a light switch solution. These signals are either on or they're off. If you can identify when consolidations or sideways moves with no or very few profitable closes are occurring, and if you can do that before you get into too many trades in that group, you've solved one of the great mysteries of trading. The difference it makes to your profitability is quite staggering. And it will solve that issue of the dreaded trade that is going nowhere. You will be able to instantly identify where the market should go and when it's not responding. And that's your move to hit the brakes, take your stops to market, get out, have a look at another market. So here's our US tariff effect. This is the S&P. Once again, this is the S&P without Danielcode. Doesn't show you an awful lot in my view, except that there's a down bar there. But have a look at the S&P with Danielcode. Here it is. Okay, you can see we already had a look at this. The closes at the high on the TO3 sell signal at those highs. Target recognition at the close of the bar. I've got the arrow on. High of the bar before it was almost exactly at the same number. Few days down, little counter trend here when the market was setting itself up for what it was going to do when the tariffs came out. Excuse me. And then bang, down it goes. We had a correlated TO3 sell signal. What do I mean by correlated signal? Again, just as with gold and silver, US equity markets and Germany's DAX are so highly correlated directionally, not in quantum, but directionally, that a trade in any one, a signal in any one of them can be executed in any other. In other words, for this particular trade in the S&P, the correlated TO3 sell signal came from the sell signal in the Russell. And you could have executed it in the Russell, or in the S&P, or in the NASDAQ, or in the Dow, or on Germany's DAX. And if you think this is panic and an accident, well, the big gap down was something, but look where it closes. Right on its blue line number, which has been on that chart for weeks, maybe months, all in members' charts. Nothing panicky about it at all, really. Very rational. It's letting go, and it's managed to hold exactly, almost exactly, at the close of the blue line bar down there. Okay, what am I missing here? Let me see. Something dreadful is happening here. Okay, so excuse me while I bring this back where it should be. Here we are. So yes, that was the S&P. It had a little trip away for a while, lost its concentration, but that's exactly what happened. So let's see what else there is. This is gold. Gold had a decent sized bar down, but look where it closed. It rallied right up back into the low of the previous bar. So really, total lack of any fear in gold. The gold bulls are holding on. Have a look at it in more detail. This has got the Danielcode numbers on it. Very much a muted response. You had a TO3 and a blue line sell signal. There was target recognition on the bar that you can see is the high that's got the sell signal on it. Down it goes. Where did it go to? Well, there's a red line there at 3072.1, and that's about where it went to. Very rational, very orderly, just ticking off the Danielcode price levels, and then back up, big rally up on the close. Here's the next one, natural gas. I hope that you're learning the difference between charts you see without Danielcode analysis on them and the charts you see with those numbers on them. Have a look at this. It's really interesting, natural gas. You can see the bar that says TO3 buy signal. We had an inside bar, which for trading purposes is a null or a void. Simply carry forward the last valid signal you had, which was a buy, and you got a little bit of a buy today. I'm particularly interested in this chart because if you go back 4 bars and look at the high going down and then the bigger bar going down, stopping at the 3.944 red line, both of those bars are very unusual position, but actually they're both Danielcode Beyond Masterclass bars. And apart from everything else, the Beyond Masterclass, of course, teaches you where are the limits of this envelope, this imaginary envelope with stretchy elastic at its sides that can expand and contract, expand and contract. And those two bars are incredible, are Danielcode momentum bars. So that set the high of that elasticized envelope, if you like, and a break of that could give you a decent run. Okay, here's NASDAQ, which has been, of course, the boom market of the great bull market that we've been living in. As you can see, that's a fairly unexciting bar. It's just a down bar. This market's been down for a little while. Here it is, same thing. Have a look at the close. This is your correlated sell signal. It's correlated. It had its own Danielcode target recognition on the close of that big upside bar, closed exactly, almost exactly the red line, 19756. The correlated TO3 sell signal from that was based on the signal in the Russell. Here you are, down it goes, elects the low, straight down, no panic. Where does it stop? Almost exactly at the blue line of 18655. These are orderly, measured moves by these markets. There's no panic, nothing yet of any excitement. It's just day-to-day trading. Here's beans, same thing. Have a look. It looks different with the Danielcode levels on it. Had a nice buy signal that ran us right up in that high, which had a TO3 sell signal on it. Target recognition came in the bar before, and gap down, and then a relatively modest bar. T-bonds has been the big winner in all of this. It's here's your Danielcode with the Danielcode markings on it, analysis. You had a sell right at you had a buy right at the bottom at 11:15.09. You had your 4 days, 3 or 4 days up. Then you had your outside bar while it had to think about what it wanted to do, which was a TO3 sell. And don't forget, with outside bars, if you get an outside bar on the day of a new entry, you must stop and reverse. And that's what that mandatory stop and reverse refers to there. Now, it sounds worse than it is. If you don't do that, it won't be the end of the world. You can just use the JCN rule to enter the next day. You will get much the same result. But the UST bonds have been determinedly going up, hasn't it? Here's the big loser, the US dollar. Not that exciting as well on the close. It looked a bit better than it was. Big move down, breached the blue line at 101, and then rally back. So it's the big loser. The big winners are the sell in silver, the sell in crude oil, and the bonds has just been on its way up. And this stuff is being reflected most obviously in the currencies. This is the dollar CAD, or the dollar they call the loonie, the US dollar, Canadian dollar pair. They're called the loonie. The loonies, the native bird of Canada. Have a look at this. That's a big bar, isn't it? And in fact, all of the currencies strengthened against the US dollar, some of them very markedly. This was one of them. Same thing if you want to go through any other markets that have the US dollar in it. Again, they're highly correlated directionally. If you've got the US dollar, if any other pair, you would be expecting to see the US dollar weakening, which is what's happened here. This is the British pound and the Japanese yen pair. We had a buy signal here. It ran up, then it looked really weak. It tailed right off near the close and didn't make much net progress at all. And then we had one of our flip me sell signals here. I'm not sure whether we also had another sell signal, but GBP, JPY, but there was the flip me sell, which you can see on the website. British pound weak against the yen. I don't know how long that'll last. Here's the more typically what you see. This is the Kiwi, the New Zealand dollar, US dollar pair. You had a TO3 and blue line buy signal right at the low. 2 bars up. Then this big outside bar. Look where the high went, 58.53. Almost exactly to the blue line number. This is not random. This is not panic. This is by design. This is what markets do. Markets are tracking these numbers all the time. And in fact, excuse me, markets are trying to talk to you. And markets, excuse me, have always been trying to talk to you. The issue has been that until we got Danielcode, we didn't know their language, so we couldn't understand what they were saying. But what the market's actually saying to you is, I know these numbers and I'm tracking them. I know these Danielcode numbers and I'm tracking them. And we expect the market to tell us that every 2 or 3 bars. If it hasn't told us that by 3 bars, it's now switched to the other mode, which is not these ratios, try a different ratio. And that's comparatively rare. We expect markets will just follow these dominant blue lines and red lines with a high degree of accuracy across every market. That's what I've shown you today. I've shown you almost all the markets except for copper. All the other Forex pairs with the US dollar in them, I didn't bother showing you because they were all exactly the same. US dollar weakness, the other currency having strength. So if the US dollar is weaker than the Kiwi, you got some problems. I don't believe that's true, but that's what the chart's telling us just at the moment. Okay, here's the fourth seal. Some of you follow it from Frank DB, who's a marvelous young man. He runs the fourth seal for us on S&P, crude oil, and gold. And this is his quote for this week, as he said, not much to add. The last cycle inverted and became a high. We thought it might. Will go lower into the 44.29 cycle mid-April or early May. Until then, we should see lower prices. Daily Danielcode signals will guide the trade setup, mainly looking for sell signal. As he says, the market could go lower in a hurry. Don't panic. It's a correction. Okay? And there it is. So for those of you who haven't already, folks, I thank you all for being with me today. If you haven't already had a free trial, please help yourself at www.thedanielcode.com. Just click on the prompt for free trials. If you have any trouble, contact Terry at support@thedanielcode.com. If you previously had a free trial, the computer won't want you to have another one. It's a bit mean like that, but Terry will fix that up for you. And do take a moment, please, to consider risk disclosure. It's very easy to lose money trading futures and Forex if you don't know what you're doing. It always seems to me ridiculous that we have to put these statements up and show them to you so prominently. To me, they're so self-obvious. If you don't know how to drive a car and you get in the car, you're going to hurt yourself. You're going to hurt someone else. You're going to smash some cars up. You're going to do some damage. No intelligent person would dream of doing that. You're not going to jump in an aeroplane and think you can fly it without any training. You're certainly going to get into big trouble. It's the same with trading. Make sure you understand trading. It's easy to learn. We spend a lot of our time teaching people how to trade. And once you've learned to trade properly, with a proper trading system like the Danielcode, there aren't any others, it's just the Danielcode, it's very easy to make money very quickly. But if you don't know what you're doing, you're going to lose your money. There's a lot of risk involved for people who do not know what they're doing. So I do say to you, please make sure you've learned and got to a competent level before you risk any real money with your trading. And that's it for me, folks, for today. I think what's going to come is far more interesting than what has been. I think we're going to see a lot more fallout. There are going to be reactions by other countries. There are going to be all sorts of currency, big moves in currency as the various markets try to find the balance of what has happened and what they fear might happen. It's going to be wonderful trading. In fact, I think it's going to be so good that I'm going to do another tutorial next week. I think there's going to be so much market movement that it'll be very worthwhile slipping in an extra webinar next week, same day, same time, so I can keep you fully informed of what you're seeing with these wonderful, wonderful markets. And that's it. Thank you. It's good to be with us. Rolf is with us. He's doing the video course. He's going to enroll in video 3 in the next week. Wonderful, Ralph. I look forward to you doing that. Ralph is a Kiwi. Nice guy, lovely guy. All Kiwis are lovely people, aren't they? They're our friends. He lives sometimes in New Zealand and sometimes in Melbourne. Here's Adrian. Thank you, John. See you next week for our next class. Yeah, looking forward to that, Adrian. I look forward to that indeed. For the rest of you, any questions, folks, please send me an email, jneedham@thedanielcode.com. If there's any particular subject that you're interested in with trading, let me know what it is, and I'll be happy to prepare some material for the next webinar for you. Apart from that, enjoy your weekend. I'm off the clock now, and you've still got the day's trading still to come tomorrow, and I will look forward to talking to you at our next webinar. Goodbye for now.